you're doing well. We've got ECB day today, and we've got a PAL speech later. Okay, so do bear that in mind. We've got a very much a roller coaster session ahead of us for London and New York. So the 24-hour difference has indicated risk on today. So what happened with the VIX? We hit the 26.5, and then it really did crumble. It fell ridiculous amounts. I think it fell 8%. So the big fish came in and they hammered the VIX down, and that's that. I suppose it did coincide with some news that came from Norway, funny enough, and they might help us in Europe. They're gonna help resolve the the energy crisis. They're gonna give us some energy. Maybe that was the risk on news. I'm not sure, but it took a little while for whatever news it was, to sink in, and then we really did propel. The retail guys really shorted the risk as well, so we should see this number really chip away at the big picture tomorrow. But it all depends on today, of course. It's all in flux. It's in fluctuation. So I'll show you how they shorted the indices as well. Keep an eye on the dollar bubble. If you're a Quasidb subscriber, keep an eye on that bubble today. That's going to be of note, right? Because it's actually moved a lot since the making of this bulletin. These bubbles are constantly moving. So keep an eye on that dollar bubble. So this isn't particularly that good, because we'd want the short dated yields to fall and we'd want the long dated yields to rise. And then this is the opposite of what we'd want. This is saying that fear and worry near term. If the yields rise near term, it's like, oh, panic. So although it was only a tiny amount, admittedly, but this is the opposite of what we'd want. So whether or not that rally on the S&P is legit, maybe it might be fake. So we have to be careful. Risk off. This is totally out of whack and out of bonk, and that's that, because there's not much to be said really. What we'd want the numbers to increase over time, not increase and then decrease and then increase. So we've got like a multiple inversion, one here, and we've got one here, here. So that's not particularly healthy. So the EJ, GJ, German 30, S&P, they're the standouts from the sentiment from last week. So they've really shorted EJ a lot. So that was the biggest mover. And that might explain the moves that you're seeing currently on that particular pair. It's going pretty parabolic, and that might be the reason for it. So they're really heavily short. So it goes up to punish those guys. So yesterday was very interesting, and I put some stuff out in Discord, saying how potentially the dollar could potentially have take it a little bit easy, because it's been a complete wrecking ball. When it did take its foot off the gas, it did coincide with that rally that we had on risk. So obviously there's a strong correlation of the dollar and risk appetite. So I guess we'll have to wait and see what happens to this tomorrow. This is constantly updating, and what I'm going to potentially do is add this to the spreadsheet so you can see this. And it constantly updates every minute. So we can certainly add this to the spreadsheet, and it shouldn't bog it down too much, hopefully. But it'd be interesting to see the development, whether or not that was like the turning point. Okay. Dollar Swiss is the laggard, so that is interesting. Dollar yen is just doing dollar yen things, and it's completely in rocket mode. And the yen bubble is strong sell, so there's a sentimental reason for that to perform well, because the yen. So that's that. So this is the difference from last Thursday. This data isn't reset on Sunday. It just simply takes where we are right now, where we were on Thursday. This is going to require a risk-off scenario. So we'd have to keep an eye on our risk appetite. They're the tiers that you can subscribe to. This is your QDB Daily Bulletin access. If you want to get access to this document and the trade of the day, based on the bubbles, and using the strongest bubble versus the weakest bubble, and then we can we derive a signal from strong versus weak, and that's that logic. So I put something out, actually, a level of interest where you can enter, and so they're the available options if you wanted to do that. And don't forget, on the Patreon website there's a button here, it says click more. So you can click more and then you get to the premium tier. This is just the basic. So if you click more on the Patreon website, you know, you can see more tiers. And there's the Discord link as well. And that's that. So where we are right now, it's not necessarily, you know, it gives us a good deal of information, but it doesn't tell you what's happening in real time. If you get the FXCM trading station, you can watch these numbers evolve, and that's incredibly more powerful as watching the flow. This is just a snapshot. This doesn't really tell us that much, but watching the, you know, the numbers move, that tells us a great deal more. There's the S&P. So they really sold it. So I'm not sure why exactly, but they certainly did. And what's great is that they didn't try and buy. Well, they did try a little bit, but it wasn't like a knee-jerk reaction like we saw here. They really did try and buy. They really did try and buy it. They bought it, but only a little amount. And now they sold it. So I'm not sure what caused it. I'm not entirely sure. It could have been a news event. It could have been news related. But they certainly did sell it right there, and up we came. Do note that we're going to be still within this range here. You can see that high and that low. So I think that's going to be a challenge still. And Dow Jones, there we go, they sold it. And this was a trap. See, they sold it, it came down, and so they're like, right, okay, so it is going to fall. I'll hold on to my bearish bet. And they probably get distracted and they do something else. And an hour later, they think, oh, God, hang on a minute, it's going up. And they're probably thinking it's going to come down. And so they decided to hold on to that short bias. So you've got to remain focused all times. If you're trading, if you do get distracted for like an hour, and you know, it can go against you. So you do need to know your exit. I had like a little emergency in the house yesterday. My toilet was leaking. I had to look and get a plumber in for that. Of course, that took over my trades. And by the time I got it all fixed, gold had moved a lot. But luckily, you know, you need to know your exit. So German 30, you know, I put a hexagon in case they go long. If they do, it will fall. And there's that gold move. They sold it. So they sold it just below the round number, which makes sense that they would. I suggested that they probably would do that, and we used that bearish volume as a support, just like I said yesterday. So this went a little bit against me, so I got out a loss, and also I had that issue with my downstairs bathroom as well. So I had lots of water to mop up. So you could try and stay focused if possible, and get a copy of this trading station, and then, you know, you can profit quite easily. It's quite simple. Stop loss cluster update. Now the stop loss cluster for AU is the largest. However, you can see the dynamic shifting is indicating, you know, buy, and it's going against the big picture. And the big picture is to say to sell, but the shifting over time is going against the high level bias. In fact, there's a lot of mismatch again, right? So it's telling us potentially reversal on dollar. See? And largest move was gold, which 15%. So, you know, there's that, you know, the move. They sold it, so up would come. They did the same with FX as a side, and that's that. So this is quite low. We'd want that a bit higher. We want about 70% before entering. You definitely don't want to enter below 50% because it's worse odds in a casino. So you'd wait for that to be a bit higher. Hope you understand the logic. If you don't, I can totally help you, and just let me know. But all it is just examining the sentiment shifting against the technical. So when they buy, price should fall, and when they sell, price should go up. And we use the technical daily pivot to assess whether or not they're right or wrong. And the daily pivot's good for intraday analysis. So that's the logic there. So it examines how they're positioned for the day ahead. What are they correct if we use the daily pivot? Yes or no? And the pound is currently saying no, they're getting paid. So we can see a reversal on pound potentially. And but we didn't get filled on that trade of the day. I put a level out and we didn't crack it, so we had the 0 pips, and I have to wait and see what happens today. So on the weekend I'll add this to the total. So that's that. Technical checks. I imagine these should probably be moving soon. And the sentiment dynamic shifting is indicating a reversal. So whether or not it will continue, we don't really know for sure. But I imagine these should come off the extremes, because these have been very extreme for ages. Do note this, of course, and of course we've got the US data, but probably eyes on this Powell speech. And he was a wrecking ball last time. So this is probably going to boost the Euro prospects, and then this could probably hamper the Euro prospects. This could be a bolster for the USD. So we could potentially see a big rally on EU and then a dump, right? So it all depends on how we finish on the day and whether or not we'll finish positive or negative. So keep an eye on the Euro today and keep an eye on your risk as well. It's really important if you're trading, you've got to keep an eye on risk appetite, because it impacts FX a great deal. Because all your currencies are sensitive to risk. So especially if you're Aussie or Swiss, Euro, USD, they're all linked to risk appetite. So you do want to check, government bonds, indices, VIX, and things like that. So very volatile today, and keep calm, always trade safely. I'm going to wrap up now, and I'm going to do a quick 2-minute video on the indices and see how we developed after the London Open. So could be a bit of a crazy day, so just be careful, know your exit, you should be fine, and I'll speak to you soon.